If you've ever been around tradespeople, you can quickly recognize like, man, that is a good carpenter or framer or contractor. Now, you never say, dude, he's great because of that hammer, right? He's great because of that circular saw or whatever it is, right? You don't say that. You say how good that person is. Now, mind you, all of their tools makes their job way easier to be a good carpenter or good contractor, right? Good framer, right? Now, same for you as an investor, you need tools to help you. But I'm going to be honest with you, the tool isn't going to save you, right? The tool is just to help make that job easier, the job of being a real estate investor. In this case, we're going to look at this buy and hold analysis that is for you and how to use it, right? So that when you are analyzing your own deals, you can be a better investor. Someone can look at you like, man, he's a great investor. She's a great investor. Let's get into it, okay? Now, what you first want to start off in recognizing is the different color of boxes. Now, jump into it. I just want to show you how we use this tool, okay? So first off, all the gray boxes are ones you can modify and manipulate. If it's not great, you don't touch it, right? Because you may mess up some formula, which may mess up something else down the road, right? On another calculation. So only do the gray boxes. Now, if you're working with us at Blackstone Company, we've already pre-filled these out, made this out for each property that you're analyzing and looking at, okay? Now, what you'll see is you'll start off in seeing purchase information. You'll see loan details, unit details, income, and then expenses and variable expenses. Now, most often in the trade, we look at changing those variable expenses based off of a percentage of the actual gross income. Yet you can also change these based off of the actual dollar amount that you think it might be. We also have some future assumptions. And I'm going to be honest and stop right here and just say it's been an awesome journey to be an investor and an agent. I've gotten to see so many different people's Excel files, tools that they've used to be able to analyze their own deals. And so with that, I've incorporated a lot of it. I got to give credit where credit's due. Everyone from Bigger Pockets to Rick Daniels to Talk to People. I mean, even local investors. Shout out to all of you guys. Thank you for helping me make this amazing. And my finance degree of 4 years. Thank you. Got something. Okay, when you're looking at this, after you're looking at the numbers and you enter in all the numbers, we also have kind of a look over at the market analysis. Now, I want to kind of go over this real quickly, but basically when we look at our comparables, we look at it at first a price per square foot approach, which really helps us when we're looking and talking to lenders or appraisals, right? Now, overall sell price is what everyone else looks at, right? And so that's what we're looking at here. And when we do that, we can match up and kind of figure out what we think the actual value is. Now, we then put that value into what we think our after repair value is based on the high ends of those numbers. Now, you may be looking at this like, what? A duplex for $142,000? Where do I buy now? Buy, please? Can I buy now? You don't know. This is my first duplex I bought in 2017 that my wife and I house hacked, moved in one side and rented the other side. And I'm going to show you with this how these numbers panned out, okay? Now, whenever we send it to you, you will have a couple links over here to kind of go more in detail with the numbers as you want, right? First is that market analysis. Now, this is just a quick overview look of the numbers and how it pans out. You can see how many unit count, what's the square footage, the gross income, if it was reported, all that good jazz. Next, what we have is the tax records. The tax form really is pulling up anything that we possibly can from the tax data. Realist and Data Scout is really where we pull this data from, give you any old MLS, and you'll be able to tell whether it's in a flood zone or not. The next is going to be in comparable link. So these are going to be the houses or the multifamily that are sold just relatively next to it. And you can look and peruse through any of the pictures to judge, okay, what's the condition of one versus the other, right? The next is the rental URL. And this one is literally just pulling in to see what kind of rents you're getting and what condition their properties are in to get those rents. Now, if we keep going forward to this, you have a how-to video, which is probably where you clicked this video, or on our website. Good job. So after you got the questions tab. We're going to look at the bottom there, and you see that there's a questions tab, a P&L. That is profit and loss. How much money is coming in? How much money is going out, right? Now, then you're going to look at a market rate analysis and a value add analysis. And I'm going to explain those two things. But the big key difference between these two is a market rate analysis is going to be the way it is now without doing any work, but just getting the rents to where they should be. The value add analysis is going to be based off of if you were to renovate it and make it look amazing. How much rent are you going to make and how much expenses is it going to take you to get there? And what are those ratios, okay? So now, the first time when I analyze a deal, I go to the P&L, the profit and loss statement. Overall, at the top, it just gives a clear picture of what those expenses are. And then in that, the first column here, you can see is what you're buying it at. Now, I'm gonna be honest with you. I have never, probably, let's see if this one pans out. Nope. Okay, there we go. I have never bought a property that cash flowed as it sat. There was always something to be done to make it work correctly, right? So this one, it was pulling in $500 a month in rent per side when I first purchased it, okay? Now, what you can see here is then it will break down what some assumed expenses are there, right? And we can get more in detail to that, and that will be further in the video, right? Then it'll overall take that monthly income minus your expenses equals your net operating income. This is what you would make if you had no mortgage on it, right? And then you can see we add it back in that debt service, and now our cash flow is negative. Now, a lot of people like to analyze their deals based off of a cash flow per unit. So we break that down a little even further. And obviously on each side, you got monthly and then you got annual, right? Whichever way you want to calculate it. Now, the valuation is basically saying what they think the value is at the current cap rate with the numbers that are provided, right? So it's saying technically this was worth $93,000. If I'm just strictly talking about what I'm buying it at for a cash flow perspective. This is different than if you go back onto the questions tab and you look at what things are actually selling for, right? Those are market rate comparables, whereas this valuation is solely based off of what is the income it's making, right? Now, you could talk about what the equity improvement is, which is what you're purchasing it versus what the valuation is at that moment, and then expressed not only by a dollar amount, but then a percentage amount. And then return on invested cap, you have that as well. Really, financial ratios are just a measuring tool to see, is this deal worth it to me or not? Now, when you go to that market rate analysis, now a reminder on that market rate analysis, it's as if you're not doing any work to it, right? So you can see that the estimated repairs here is 0. Okay, so this is really truly not important to me because for me, I knew I was going to flip this property. So I went ahead and did the value add analysis. It's the same thing. The only difference is the estimated repairs. And I'm going to be honest with you, I probably put $43,000 into it. Now, thanks to Talk to People, that is actually a formula of how much are we repairing it is based off of a criteria that we use, which is in the back end, which you don't normally need to look at. I never really look at the back end, but you can see kind of a rough estimation of how we do repairs. And the repairs is based off of a price per square foot and based off what we think we need to do to it. So I knew I needed to do flooring, painting. I need appliances and fixtures. I didn't think I needed to do electrical and plumbing. So basically that's where I got that $43,000. Now, when I go back to here and I look and I see what my monthly income would be, which was $800. I thought I could get $800 per side, right? Then I measure that to my expenses. My monthly cash flow was $137,000. Now, some people want to know what their gross cash flow. The gross cash flow is taking out those variable expenses that you should be setting aside in a savings account. So for example, you don't actually incur an expense of vacancy. You don't incur an expense of maintenance or CapEx, right? It just happens when it happens. But you also don't want those things, your CapEx, your vacancy, your maintenance expense, to wipe out all of your cash flow. So I mainly look at that monthly cash flow number, but it is good to know what that gross cash flow number is, as if everything is stabilized and doing okay. All right, then you can see what your net operating income, your total cash needed for the deal, and your total cash on cash return, right? And then you can go in further and look at what it looks like over the year. It's always gonna do way better. Again, what you hear all the time is time in the market beats timing the market every single day, right? Now, I wanna prove that just by showing you what we can do with this, right? Now today, I know my rents are close to this, or I can get it to this. If I did that and I'm at $2,500, now mind you, everything else except for the variable expenses stays the same. Those variable expenses are based off of our percentage. And so now you can see my other fixed expenses stayed the same. Now you can see I'm looking at 16% cash on cash, and I'm looking at $740 of monthly cash flow from this property. That's great. And that's from 2017 to now it's 2023, right? So keep in mind, my cash on cash is not as high because I did not do what's called a refinance. If I wanted to refinance out and pull my money back out, I could do that. I could pull that $54,000 back out of the deal and go invest it somewhere else. I decided to leave that money into the deal, right? So 16% is great for me. Now, through that, I'm just going to show you the back end. It doesn't really matter. It's just going over a little mortgage calculator. It's got your market cash flows, your value add cash flows. You can look at it from a monthly basis of what those numbers come out to be, what your annual cash flow comes out to be, all that. We also have kind of a rules of thumbs and skyline number for those variable expenses. And these are your variable expenses, and you can adjust these accordingly to whatever you decide to be, right? So like vacancy, in Northwest Arkansas, at least, I don't think it's ever going to get below or above 10%, right? Now, my minimum is 4% vacancy. Mind you, we are on 2023 are at 1.5% vacancy. That's nuts, right? But you can go back and to the questions tab, take that knowledge, and then plug in whatever you think is necessary. Now, these are decimal point, but you can obviously present them as a percentage, right? So that is really the tool, the nuts and bolts of the buy and hold analysis and how to use it. You're going to fill out those formulas here in all the gray boxes, and it will spit out all the information you need to make a decision. Now, I'm going to be honest with you on this. My first deal, 3% cash on cash, I would have never done, except I was living in this property and house hacking it. And that made this deal amazing. And what is also amazing is I got to go ahead, purchase this, and now it's one of my best performing cash on cash just because I've held it for the longest. So awesome. Hope this helps. If you have any questions, you reach out to us or look us up online. You'll have our number and you'll have our email, and you'll be able to reach out to us if we can answer any questions for you. Love to be a service and help. And remember, you as an investor, you're not cool because of the tool. You're cool because of what you can take and utilize and capture with the tools that you have. Thanks.